The market is officially in correction mode, and that means there are stocks you should be considering for your watch list, and there may be more than just a few buying opportunities. Let's talk about it. Thomas, Chris, welcome back. So both of you seem to relish in opportunities like the one that we're talking about today. The market pullback has turned into a correction and investors are exiting the market in droves. So I also know that you guys love an opportunity to add positions, maybe start a few new ones. But we have 3 today that our viewers should be taking a look at. So Thomas, let's start with you. What do you have for us?
Right. So my first pick in a rebound scenario would be UPS. A recovery in the economy would mean a slow and steady uptick in package volume. In that scenario, we'd be looking for business and consumer package volume to increase. That would probably be supported by an increase in consumer sales, retail sales, e-commerce. We'd probably see an increase in business spending in general. This would sustain an upturn in the price. Mm-hmm. But I don't think now is the time to buy it. I think that the stock really could fall another $20 or more before it hits the bottom. And that's because the chart it's craptastic. That's the best word that I can use for it. We broke support because the company has been persistently downgrading its guidance. That's leading the market lower. Analysts are lowering targets and they're taking the wind out of this balloon. The reason for people that own it now to hold it will be the dividend. The dividend is still safe and growing. The company efforts to reposition for the rebound are aiding margins, operational quality that will provide some leverage once the rebound begins. So until then, I think the dividend payments are safe, and we're just going to be looking for the bottom in the stock, which will probably happen sometime early next year, but it really just depends on how the economy unfolds, whether or not we have a recession, and what the FOMC does.
All right, Chris, first of all, have you heard the term craptastic before? I mean, that's a new one for me. Do we need to add this to our financial terms list?
Well, I haven't heard craptastic. I mean, I've heard craptacular and other things, but I haven't heard that one. I think that could describe a lot of stocks that have been happening, especially in the last couple of months. We might have to consider adding that.
Right.
All right. Well, Chris, I think I know where you're going to lead us here, but tell us what's catching your attention.
So one of the stocks that's catching my attention right now is Lowe's. So the stock is down about 17% in the last 3 months. That's taking it down about 2 to 3% for the year. Some of the stories are pretty familiar here. There's weakness in the housing market. There's a pinched consumer. There's inflation. There's retail theft. Revenue and earnings were down year over year. Not a lot of reasons to invest in the stock this year. However, prior to these 3 months, the stock had stayed at fairly elevated levels. It really wasn't a buying opportunity. Now that it's fallen, it is a little bit of a buying opportunity, and any sign that there's going to be a extended pause or a pivot in the Fed strategy would be a boon to the housing market, which would then translate to home improvement stocks. As a matter of fact, since Chair Powell yesterday said that it looked like they might be coming to an end to their hiking spree, I noticed that Lowe's has bounced up pretty sharply off of trading near its 52-week low. So, that's already somewhat being reflected in the stock. And even if you think that now might not be a time to enter a position or to add to your position, you're still getting a great dividend. It's supported by the cash flow. They're doing share buybacks. This is just a really solid stock as a buy and hold investment. And let's see, analysts generally bullish on the stock. Everything that I'm seeing based on the analyst ratings suggests we're close to a bottom anyway, and you're looking at probably about a 20% upside. Lowe seems like a really strong play right now.
All right, well, we'll be keeping Lowe's in mind here. All right, guys, Don, our content manager, isn't here on the video with us, but surely he's going to watch this video, and I think he'll let us know that he likes this next pick. Of course, we're talking about Tesla here. Thomas, tell us why Tesla is a good rebound stock.
Yeah, right. So Chris and I had a discussion about Tesla. He and I and Don talk about this stock pretty frequently. But we think it's a good play for the rebound. Among the takes is that price cuts today, which are kind of impacting results today and pressuring the stock lower, will help drive sales and volume and establish the company's dominance or continue to establish its dominance in the EV market, so that when a rebound occurs, it will be able to have some leverage. It'll have more market share and be able to improve prices. And that's really just the EV car story. Within the bigger picture, there's also the charging network, which is expected to be worth about $5 billion in annual revenue once it's fleshed out. That's worth about 5% in growth relative to 2023 revenue levels. And then there's also solar storage, AI, robotics, autonomous vehicles. Tesla is just a very, very unique company. You almost have to own some just because of what it is. I mean, it's you can't get exposure to the things that Tesla does any other way.
Yeah, I mean, right now we've all heard the stories. You know, EV demand in the United States is leveling off, and that just, to me, though, what it's really revealing is how far ahead in the market Tesla is in the United States. They're just head and shoulders above everybody else, and I just don't foresee that changing. If it, you know, it's one of those things. If the economy turns around, who's going to be the beneficiary in the EV market? It's Tesla. And then to Thomas's point about the charging network, I mean, I live in a fairly small area of the country in terms of population and such, and at a store that I frequently shop at, there's now in the last few months, there's a new bank of Tesla chargers.
Right.
And I was like, whoa, when did that get here?
Yeah, right.
And it almost seemed like it popped up overnight. It's like, oh, wow, okay.
Right.
So, you know, that just, it's further evidence to the story that there's just a bigger story here with Tesla than just beyond selling cars.
And it gets bigger all the time too, because I just thought about the UAW strike. The UAW strike has caused all the major OEMs to pull back on their EV strategies.
Yep.
The EV strategies that have been driving these OEMs for the last couple of years have evaporated. That leaves an enormous amount of market share for Tesla to capitalize on over the next few years.
Oh, yeah.
All right, well, we will be keeping an eye on these stocks, and we look forward to discussing their performance in the future. So stay tuned right here at Market Beat. Leave us a comment and let us know if you have your eye on any of these stocks or if there's something you would like us to cover next time. Thanks, everyone, for watching. We'll catch you next time. Thanks, guys.